new chapter in the US-China trade war has begun.
The shockwaves are still coming after Donald Trump's sweeping new tariffs on all imports into the United States.
In April 2025, tit-for-tat tariffs between the world's two largest economies have escalated to levels not seen since 2018. With billions of dollars at stake, industry shaken, and global markets on edge, the question isn't just who wins, but who loses more. What sparked this latest showdown, and what does it mean for the future of global trade? Let's break down exactly what happened, why it matters, and how it could shape the world economy for years to come. Background: the trade war resumes. The US-China trade war, which began in 2018, has officially entered its second phase. Under President Trump's return to office in January 2025, relations quickly soured again. The US accused China of failing to uphold promises made in the Phase 1 deal of 2020, especially around intellectual property rights and market access for American companies. Within weeks of taking office, Trump imposed tariffs on Chinese goods, claiming that China had not reformed its unfair trade practices, including forced technology transfers and state subsidies. In retaliation, China condemned the US's unilateral actions and imposed tariffs on American products. These moves set the stage for a renewed and more aggressive trade conflict. While the fire had simmered post-2020, the US's new stance reignited tensions, impacting both economies and the global supply chain. Global markets, still fragile from prior disruptions, are now bracing for a full-scale trade war with new, far-reaching consequences. Escalation timeline: February to April 2025. By February 2025, tensions between the US and China were heating up. The US imposed an initial 10% tariff on Chinese imports, ranging from electronics to machinery. This move was designed to pressure Beijing into trade reforms that many believed were still incomplete. China retaliated swiftly, focusing on US energy exports, such as coal and liquefied natural gas, LNG, raising tariffs on these key products. In March, the US doubled down by raising tariffs on Chinese goods to 20%, further exacerbating tensions. This prompted a strong response from Beijing, which targeted US agricultural products like soybeans, pork, and wheat, affecting American farmers in swing states that were critical in past elections. By April 2025, the tariff war had escalated to a full-blown economic confrontation. The US increased tariffs to 34% on a wider array of Chinese goods, pushing China to retaliate with a staggering 125% tariff on U.S. exports, alongside restrictions on 25 major American companies. These moves marked a decisive shift, signaling that both nations were prepared for a prolonged standoff, with little prospect for de-escalation in sight. Key sectors affected. Several key sectors have been hit hard by the renewed U.S.-China trade war. The technology sector has emerged as one of the most affected, particularly in terms of the semiconductor market. The U.S. government is considering new tariffs on Chinese chips, vital for everything from consumer electronics to advanced industrial applications. These disruptions threaten to disrupt the global tech supply chain. Agriculture is another heavily impacted area, with China's retaliatory tariffs on U.S. farm products like soybeans, corn, and pork, dealing a devastating blow to American farmers. Particularly hard hit are farming communities in Midwestern states, who have already faced years of uncertainty. Meanwhile, energy exports, especially liquefied natural gas and coal, are struggling as China reduces its purchases from U.S. suppliers. This affects not only American energy companies, but also global energy markets, which are already reeling from the pandemic's aftermath. Lastly, manufacturing industries are dealing with rising costs as tariffs drive up the price of Chinese raw materials and components, forcing many companies to reconsider their global supply chains, potentially reshoring or seeking alternative suppliers in countries outside China. Economic and political implications. The economic consequences of the US-China tariff war are far-reaching. For the US economy, the impact of tariffs is being felt across the board. Consumer goods are becoming more expensive, with items like electronics, clothing, and household products seeing rising prices. U.S. families could face an average cost increase of up to $1,000 annually. Farmers, especially in swing states that were pivotal in past elections, are struggling as China imposes tariffs on U.S. agricultural exports. While the government has rolled out subsidies to mitigate the damage, they are seen as a temporary fix, unable to reverse the long-term harm to agricultural trade. On the political front, President Trump's aggressive trade policies have divided public opinion. Supporters view them as a necessary step to protect American jobs and intellectual property, while critics argue that the trade war is hurting key industries and consumers. In China, tariffs are impacting sectors like manufacturing, energy, and tech, causing widespread economic disruption. Politically, Beijing has responded by emphasizing nationalism and self-sufficiency, but rising discontent over economic hardships could threaten internal stability. Globally, Ultimately, both nations' actions have contributed to rising market volatility, threatening to destabilize other economies reliant on U.S.-China trade. Global impact and future outlook. The ripple effects of the U.S.-China trade war extend well beyond the borders of these two superpowers. Global supply chains are being disrupted as companies reconfigure their operations to avoid reliance on China. Countries like Vietnam, India, and Mexico are emerging as alternative manufacturing hubs, benefiting from the shifting landscape. However, nations that rely heavily on trade with both the US and China, like Australia, South Korea, and Japan, face increasing uncertainty. Meanwhile, the economic decoupling between the US and China is creating a fragmented global economy, with the two countries vying for influence in different regions. If the trade war continues to escalate, it could significantly hinder global growth, raise costs, and disrupt international trade. However, there is still hope for a potential settlement. If both nations can strike a deal, it could stabilize the global economy and reset trade norms. The future of this conflict will depend on the political strategies of both countries, as the global trade order seems to be shifting away from interdependence toward economic blocs, with far-reaching implications for the rest of the world. The U.S.-China trade war of 2025 serves as a stark reminder of the complexities of global economic interdependence. As tariffs rise and retaliations continue, the world watches closely, hoping for a resolution that fosters stability and mutual prosperity. The path forward remains uncertain, but the decisions made today will shape the future of international trade for years to come. Now, I want to know your thoughts in the comments section below. Thank you for watching.